All right, good morning, everyone. Let's get started. Okay, Friday's session, U.S. equity markets was, to be honest, a bit of a non-event. I mean, we had a bit of a wild little rip down and then right back up into the close. But on the back of Friday's non-farm payrolls, you would have expected a more significant move, I would have thought, in terms of either to the upside or downside. What we saw was a huge beat in the non-farm payroll number. If I'm not mistaken, it's basically the best or second best number ever in terms of data, uh, jobs number in the states. When you factor that in with the fact that it really, I mean, we're already expecting the Fed to start to raise rates maybe at the end of the first quarter in the U.S. I mean, you saw the yield on the 2-year U.S. Treasuries moved up 20% on the day. So you really had an enormous move there. Then the fact that you had that kind of move and you have such complacency or a non-event in the equity market is actually quite spectacular. So, I think keep an eye on us today. We could maybe see a little bit more of a delayed reaction. Markets maybe have a little bit more time to adjust to the changes and what that's going to do to monetary policy going forward. So just keep that in mind. Yeah, and so let's move into China. I mean, into Asia. What we've seen out of China over the last few weeks has been nothing short of spectacular since the interlinking of those markets, of the Chinese and Hong Kong market. I think we're up about 15% in China or 12% or something like that. We're up to 40, just short of 40%, if I'm not mistaken, over the past 6 months in China, which is unbelievable. And what's crazy is that markets right now I think still expect an interest rate cut out of China coming pretty soon. But yet on Thursday and Friday they were warning people in China of the potential bubble in the stock market that's being created throughout all this, which I think really further complicates things in terms of their ability to be able to cut interest rates going forward. Outside of that, we didn't see a whole lot going on. Hang Seng's continued to lag, I think, more because of the strikes and things going on there than anything. Australia played a little bit of catch up today. For the first time in a while, and they did that without the mining stocks, so that's interesting. And then the Nikkei, not being able to jump on this weaker yen, I think is also something of a statement. So, all right, let's getting into the charts of interest. We've got a chart showing if you had been allocated in just the S&P 500, just the 10-year U.S. bonds, or just or a mixed portfolio, what you would have done. It shows that the volatility, and obviously owning S&P is significantly higher, but the performance is also significantly higher. So, I mean, that's nothing new from what's expected, I suppose. A lot of stocks going ex-div today. We've got TSH, we've got MPC, we've got INL, we've got PIK and INP. So INP divvy is in pounds, so just keep that in mind. Right, in terms of market data today, we had the current account balance out of Japan, which was better than expected. We had the trade balance, which was actually lower than expected. We had GDP, which was very soft there. I think that really is a bit of a surprise number, especially with all the stimulus that's been going on, and maybe has to make some of these people worry. It might start to put a little bit more doubts in the mind about what's going on there with Abe's economic policy. So it could be interesting to see how that changes things. We've also got German industrial production at the open. We've got the current account balance here locally at 10. We've got a lot of China data that hit the ticker today as well. So we had November imports, which fell 6.7% year on year versus an estimate for a 3.8% rise. So that's a shocking number for the state of the economy, I think, in China. The export number actually rose 4.7%. The expectation was for a rise of 8%, so also a weak number, but not as shocking as the import number. So basically saying the global economy is a lot more healthy than the Chinese economy from what that shows. And I think that that's obviously plays in the hands of what we've been seeing, but it doesn't really match what the Chinese equity market's done of recent. Right, let's get into the maps. First thing that I wanted to show this morning is light sweet crude. We'll look at this on the 30-minute. because this has actually been this has been a big part of what's been happening here recently, and it's been a major driver for a lot of the stocks on our exchange. Obviously, for some reason I can't get a line to draw here. Anyway, bottom line is down at 64. You can obviously see that was the recent lows that we put in light sweet crude. If we drop below 64, and we're at 65 and a quarter at the moment, if we drop below 64, I think that we're probably going to see maybe the height of this channel to the downside, which is about $5.50, which would take us sub 60. You get to sub 60, then I think there's some proper panic in some of these oil miners, some of these commodity stocks. You might see new lows taken out in some of those shares. Next one is Standard Bank. You know, we've looked at this several times. This is a real inverse head and shoulder setup here. We were like right there at the breakout points. I mean, you know, however you want to draw this is up to you. I still think we haven't quite broken out, but this is a beautiful setup. I think we're going to close above 141, and I think it's broken out, and we could take the Standard Bank to new highs in the next couple months. If we look at Kumba. So Kumba will also have a look at this on the 30 minutes. So there's been a broad range. I mean, this is the Chinese interest rate cut. It was the day that we ran so hard to the upside. We're right back down there, close to testing these lows at around 242 and change. We closed at below 247 on Friday, and we dropped 242. Then this thing can finally probably make that move down closer to the 220 level or so. All right, Woolworths. Woolworths also has had a head and shoulder. We've got a head and shoulder set up. Let me just shorten this up a little bit so you can see that head and shoulder set up there. We dropped support on Friday quite convincingly, and I think that we've got significant downside here. We've probably got about $4.50 a downside from the breakout, which happened about 77.80. So I think that we could get all the way down, probably close in the neighborhood of 73 on the breakdown in Woolworths. And I think also just from a little bit of a rotation that we could possibly see. I mean, so the Rand's blowing out again, and I think the Rand's blowing out because of the likelihood that U.S. interest rates are probably going to be going higher sooner rather than later. So that's obviously put pressure on all of the emerging market currencies. Obviously, all of the commodity-based currencies, and then I think there's a further factor, obviously now with the whole Eskom story and that sort of thing, that could put a little bit more pressure on our Rand in particular. So just watch the Rand-sensitive stocks. That could have a little bit of rotation out of them coming pretty soon. And the last one I'm going to show here is Rio. So Rio, it's looking a little bit choppy of late, but you can see how important that 2950 level is. There's just so many holds there, and these green bars. We opened up below, but we closed below it every day. So we had one close below 2950 throughout this whole time, and we've got literally probably 15 tests of that level. We finally closed again below it on Friday, and I think it's going to be real hard to get it back above 2950 today. So this could be the final breakdown here that we're actually looking for out of Rio, which probably take us down a couple pounds from this level, and obviously our miners would probably be more or less the same. So just keep that in mind. The mining stocks, I mean, the ones that have been weak are probably going to continue to be weak, especially some of these mining stocks, until something significant changes. And that's it for today, guys. Good luck out there.